Hey everyone, welcome back. My name is Levi Woods. This is Drawbridge Finance. This is an opinion channel only about money. I don't offer financial advice in any way, shape, or form. This is just what I'm doing, what I'm looking at. I'm realizing my sign is not on. I am slightly red today. The sign is indicating that I'm holding some long deltas in my account overall. So on a down day like today, it doesn't surprise me when I'm down a little bit, but all within the basis of what we're looking at in general. Volatility index today is 1508. I'm just taking a look at the VIX right at the top of the chart here. This is Interactive Brokers, up 2.79%, still relatively on the low side. We did have volatility over 20 last week, so we did see this spike above the moving average, which is about 17. Great time to be a premium seller. We put on some great trades. Already made some profits on those when we saw that increased volatility. Heading into the second week of earnings, we've had quite a few reports and some things moving around a little bit, up and down, both. We're kind of the extreme moves here in the last little while. SPY marking down 0.7%, a rate at 506, SPX at 5079. My little day trade is doing well so far. Very tiny little day trade that I take. This is an iron condor. It's got $400 in risk, looking to make about $100. So do a 4-to-1 ratio. This is when I place the trade. These alerts are posted in my Discord group. And so you can see the action, the price action that has happened. The expected move being this cone right here. We're looking at Options AI. If you're not familiar with this particular platform, great little trading platform to have us look at the expected move and see where we might, where a stock or index might move. So SPX, which is cash settled, expected range in here. My max profit range is in this light green area. I've got a very small range if it goes outside of that where I make partial profit and then gets into the loss zone. If we were to trade above 51.15 or below 50.50, we would this would take max loss of $400. So I'm risking $400 to try to make 100 and about a 10% return for the day. This is a trade that I typically take in it for a couple hours, and there's not really any management to it. We just let it go. I am doing a video on this. I did a live stream recording of the whole day yesterday, which was pretty cool. And I will be doing a video of kind of the setup and how that trade works over time. So you can see the P&L fluctuation, because yesterday actually tested to the downside and then came back into range. So it became a winner, which was fantastic. I see 7 people online, 1 like. Thank you so much for whoever left the like. If you guys can do me a favor, that would be great. Say hello. Let me know in the chat where you're watching from. Drop a ticker and a ticker, like a symbol for one of the stocks that you might be looking at. We'll pull up the chart. We'll take a look at the expected move, and we'll look at some trade ideas, because that's the kind of thing we like to do here on the live stream on Tuesdays. Continuing on here, so that's SPX. We talked about NASDAQ, also down 0.89%, very highly correlated, obviously. Oil, which is MCL or CL, trading at 81.75 a barrel, down 1%. IWM 197, down 1.34%. Lean hogs, what else do we have? Our gold marking at 2304, down 2.5%. Natural gas 196, down 3%. And lean hogs trading at 102, so in range. So those are that's kind of what's going on in the market in general. Let's look at some of the stocks that we might see, and let's talk about some. Amazon definitely on my list for today to look at. As well as AMD. Both of these report earnings today after the bell. AMD trading at 160.79, up 0.37%. I guess we're expecting some positive earnings out of that. AMD, if you look at it, last little while, we've been on a run off this 145 low and coming up potentially over the 20-day moving average. If we can get some continuation, we'll see what happens with the earnings report. Obviously, last week, Google was up 10%. Meta was down 20%, settled about down 15%, I believe. Let me just look at where Meta is. The overnight trading was crazy on Meta last week. We saw this pretty big gap down, but it was about 15%, now settling a little bit lower here. Made some money on that earnings trade. We did Google. What else did I do? Amazon. Let's take a look at Amazon. We want to set up some ideas where we could potentially make some money. So the first thing I like to do is look at the expected move. I do use options AI. So that's the position. Let's just pull up Amazon here. We're going to look at the 1 month, and you'll see that the expected move is quite large. So we have a potential based on the option pricing of it moving up or down into this range. So the low side being 165 and the high side being 193, almost 194. So 160, around 166 and 194. Let's mark those on the chart and see if we can come up with some trade ideas. So 166 and then 194. So there's the expected range based on the option pricing. The standard deviation cone based on its usual movement is obviously out here. That we're talking about a 3-day trade. So we're talking about, Friday's expiration. So right exactly with the expected range. We definitely see some support here at that 170 or 166 level. If I was setting up something, that's kind of what I would do is use that 166 to be my baseline. I would take some risk down in this zone to try to make some money in this zone. So this would be, let's just color code these. We'll do, I'm gonna aim for this to be the loss zone and then this to be the profit zone. So let's see if we can set something up like that. Options AI makes it super easy. We can just go over here. We can say we'll do a bullish position, a credit put spread. We'll do this expiration, and it will just tell us what the trade is. This is max risk of $200 for a max gain of $51. From a return on capital standpoint, making a 25% return in 3 days. This is buying the 162.50 long put and selling the 165 short put. Now on earnings, these moves can be pretty big. So what I typically do is I just move these down a little bit. I can just go to lower strikes. What this does is it reduces my max profit and increases my max gain. So if you notice, 51 bucks, this is that 4-to-1 ratio. So we've got risking 4 to make 1 on the spread. If we do that same math on the next strike down, only making $40 at a risk of 211. So just under 5-to-1 risk to reward ratio. The lower we go, the worse it gets. In this one, we have risking 10 to make 1. So this is about a 10% return on risk capital, but it's outside of the expected move. So you can take a greater return with less risk, overall, a higher probability of making money, but greater risk in relationship to the amount of money we're making. If we did 10 trades and we won 9 of them, making a 10% return, that one loser would wipe out all our gains. So it's not always smart to take the move to the outside. Sometimes it's better to take a greater risk and spatter on a couple of these trades and say, well, what happens if it stays in this range? What if we do a neutral trade? This is selling a call spread and selling a put spread at the same time. Now we have a potential of making $100 with a risk of 149. We have an outside move, we have max loss if the stock moves up or down too much. But if it stays in the expected range over the next couple of days, then we have the ability to make $100. Typically with this, what we like to do is we want to increase the amount of risk because making $100 is not enough to support ourselves if we're full-time traders. So one of the things we could do is we could up the number of contracts. We could just do a couple of contracts and say I wanted to risk $1,500. I could risk $1,500 by doing 10 contracts of these condors. Or the other thing we can do is go wider. I typically like to just go a little bit wider. So I'm going to select this, and this has a risk of $319. The max gain 181, still outside the expected move. Really what we're doing is we're looking for the kind of the sweet spot. This is still almost a 50% return on capital. when we're making almost a 50% return on capital with 75% probability of profit, that's pretty good. Now, what if we just select all of these and we widen this out as a whole? This is going to decrease our max gain, but increase the probability of making money. So I'm going to widen these out. Now here we're at 564 to 186, 81% probability of profit. This is the type of trade that I would like to see. So the 162.50, the break-evens at 160 and the break-evens at 199. Let's take a look at what that looks like on the chart. So 160. So we know that was our expected move. Oh, I'm going to just add some more lines here at 160. $199. So that, and that would be an all-time high for Amazon if we were to go above 199. That's the type of trade I would like to take. So I'm going to execute this in the platform here. I'm going to go continue. This is the position I'm going to put on. I'm buying, you guys see that? How difficult is that to see? So at the top here, so I'm buying the 205 call. I'm selling the 197 call. I'm selling the 162.50 put. I'm buying the 155 put for May 3rd. Now, this is risking $565, and I am going to, if this goes against me, I lose that whole 565. So this may not be appropriate for smaller accounts. We have to take all of those things into consideration. 81% probability of profit. I'm going to zoom out here a little bit. I'm going to go review order, and I'm risking 565 to make 185 on a $7.50 wide spread. At break even or at expiry, you need the stock to be between 199 and 160 to profit. One contract, limit price 185, estimated credit 185, and I'm going to hit submit. I'm going to go to the dashboard and we'll take a look at what this looks like. So there you go. There's my trade in options AI, and it is showing marking right now as a little tiny loss, and we'll see where it goes. Now this earnings report is going to blast this up or down. Easy money, thoughts on a put ratio on Tesla, also thoughts on CPNG. Let's take a look at Tesla right now. So Tesla expected move. If I was going to do a trade on Tesla, I would be looking at this low point here, which is around that 142 mark. And I would be looking at the expected move out. You could do with put ratios, you could do any sort of duration. Let's look at the May 10th for next week. Let's just see what it has. Earnings are already passed, so we don't have to worry about that. The expected move is 173, and we have a low point of 142. I might want to put my break even around the 150 mark on Tesla. Let's see if we can build something off of that. So let's take a look. Find Tesla in our list. The stock we trade all the time, down 4.5% after this big rally yesterday. And I am going to place a, where's my chain? So let's look at the May 10th. That's a really short duration. I'm going to turn the strategy builder on, and I'm going to turn on the weeklies. So we'll look at the May 10th. If you're not familiar with an options chain, we're looking at the May 10th expiration, which is 10 days away. What I said was I wanted to look at like the 160 break even. So let's just turn on all here. Well, is there any value down here? There's so little value down at the 150. It's not even close. My fear, obviously, especially with that gap, is the put ratio makes a lot of sense, but a put ratio is a bullish trade, and with two large gaps from 140, 160, 190, 190, this is a large move. This is $50 move. Can be a little dangerous to try to capture that. One thing I might do, since it's so far away, let's just see what the cost of buying a butterfly is. Like, let's say I wanted to buy a butterfly. Now this would be entered for a cost of $15. So $15, and the profit profile on this, there's potentially making $1,000 if Tesla was to drop down into this range. Even dropping today down into this range, this trade would make $200. It is a very easy way, a very cheap way to make money if you think there's going to be a massive drop. Now, the thing about this is if it doesn't drop, then there's no credit collected. So you actually lose whatever money you're putting into it. So you have to be pretty confident that it's going to drop down to that level. And that level would be that 150 level. The peak would be down here. So if I was in that position where I thought it might drop down this low between 160, let's put the whole range on there. At expiration, the profitable range is there. So if I thought that the stock was going to drop down there, it's a very inexpensive bet to buy a $15 position. And if Tesla was to drop down into this range, we could make up to $1,000. We'd make $200 just today if it gapped down into that. What we can do is we can actually finance this with a call spread. So if I didn't think it was going to go up, I can just buy a call spread. Now let's look at this profit profile. There's basically no risk to the downside. There's risk if we think it's going to go up. So this is the opposite of a bull put spread or a put ratio spread. It starts with a small credit of $15. Most of that gets eaten up by commissions. If Tesla drops down, there's a chance of making money. If it goes up, we have $500 worth of risk on the line. That move to the upside to lose $500, it has to move above 215. Let's look back at that expected move again. Expected move for May 10th is 197. So 215 is up here. So that would be the loss zone. Lose $500 here. If it was 210, this is kind of where the loss zone starts. So there's from zero money to negative 500 if it was to move up over that. Has not traded that high for since before earnings. And obviously this earnings was quite bullish. But that trade would make a ton of money if it was between 160 and 140. So if it instead dropped into this lower zone, that would be the profit and makes kind of nothing in the middle. That's one trade idea. The question was about a put ratio spread. So let's take a look what we can do. I don't know if I'd want to get long Tesla unless the price was really great. So with put ratios, basically looking for a small, we're looking for a small credit or at least a decent sized credit. I don't like to open these for only $20. You've got considerable risk on here. It's $15,000 worth of risk to make it like 15 bucks. It's kind of like picking up pennies. If we do get that move to the downside, this has a nice profitable range that could make up to $500. So that's kind of the trade-off. We can flatten this out a little bit by moving this over. Maybe we're being too aggressive, putting in a put ratio where it's like 427. What if we just did like a 1-1-1 trade on this? That might be a little bit better. So I'm going to break apart this 160. I'm just going to clear it actually. I'm just going to do a very small 1-1-1 trade. This opens for a credit of about 30 bucks, which is still not fantastic. Again, this is below the expected move, and the profit profile on that looks like this. So we have a profit 10 to the downside of around 280 bucks. Still max loss 15,000. Open for credit. If the stock goes up and doesn't drop anywhere close to this 165, then it has a very high probability of at least making $30. So that might be worth it. I would be tempted to play these as butterflies or some sort of condor. So let's close this. And then very simply just buy. This is basically open for nothing. But you'll have about $250 in risk on the downside. So there's the profit profile. You could make 250 bucks, could lose $250 depending on if it falls into that range. Break even between 150, 754 and 164. So you got about a $7 range in there. Now, if we took a look at that, that's kind of the profitable range. If it dropped into here and then 164, if you closed it early, it really is anywhere here will create a profit. So that's your profitable zone with a risk of $250 with potential of making about $250. So it's a 1-to-1 risk reward ratio. It doesn't make anything if the stock goes up. So that's one potential idea. The other way you can do that is to play that little guy with an extra put or with an extra short put. So you can just sell one more of these. Then you got a 112 with a long put protecting. And when you look at the profit profile on that, keeps popping off my screen for some reason. There we go. We end up with a little spike to the upside. And then we actually have some money, make 60 bucks if the stock goes up. Again, not fantastic risk to reward in this case, but there it is. That's some put ratio ideas. I would look for more of a drop to the downside before I was doing these trades. Or I would buy some butterflies just for a debit. Okay, CPNG. Anybody else have any tickers they want to look at? We've got 6 likes, 19 viewers. Fantastic to have you all here. Just let me know what you're looking at and we will take a look. CNPG, I'll take a look at that. Okay, maybe we're not. CPNG. Let me get the ticker right. CPNG. I don't actually trade this company. Coupang, $22. Valuation's a D. That means it's slightly overpriced right now. The growth is an A, profitability an A, momentum's A+. Broadline retail. I don't actually even know what this company is. $22, up 33% year to date. Let's look to see if there's some options on this and what we can do. CPNG. So there's the move on a different chart. You can see there's actually quite the gap. I'm assuming this was earnings. Just gonna zip back and look over at let's look at the position here that I have on. We're gonna go to positions. We're gonna look at the iron condor, continuing its trend inside of the max profit range. So that is what is happening today. We could see a bit of a sell-off later, but for now it's up. CPNG. Let's go a little bit more standard on this. We'll go out to May 31st is 31 days. June, you know what? We're really into June. 52 days. What I typically look for is that 1% a month. The 19 put gets 25 cents, which is in 52 days, slightly less than 1% a month. But at least there's $1 wide spreads on this. And let's look at the expected move for June 21st. So I'm gonna, again, head over to Options AI on this, and I'm gonna put in CPNG, take a look, and we'll go out 3 months, and we're just gonna find the date that is June 21st, and the expected move is between 1992 and 25.27. So if we did a credit put spread for that date, 52 days out, we could do risking $83 to make $17, which works out to about a 15%, just so over 15%, about 17 or 18% annualized, sorry, not annualized, 15%, can't speak. Let's do it on the calculator. Let's pull up the calculator so that I can stop thinking about it. Let's so we're max profit is 17, max risk of 83. Who's guessing percentages here? That I'm guessing it's around what, 18%, something like that. right under there. So we've got 17 divided by 83. 20.48. I'm way off today. See, that's why we're using the calculator. 20.48% return with, and going the wrong way here. Or not. Where is that silly thing? There we go. With 79% probability of profit. So there's a little spread idea. Just selling the short put, buying the long put as a spread. $17 over the next 52 days. Looks like there's earnings coming up. We'll take a look at the last earnings. When I say that, for those of you who don't understand how I saw that there was earnings, when we look at the chart here, this blue cone is just showing 68% standard deviation based upon the previous moves. So it's just a math equation, 68%. So it's very smooth. The shape of it is smooth. And when we look at options AI is a totally different thing. It's not just estimating it, it's actually making calculations off of the option pricing. So we have this large move to the outside, and then we have relatively flat after. So there's an extreme happening here. And that extreme right here is what I'm looking at. And when I see that extreme, I know that in that time frame, there has to be an earnings event of some sort. So here's May 3rd, and this is May 10th. There's very likely earnings sometime between May 3rd and May 10th. I don't even know this stock, but when we scroll down here, we can see that the earnings are expected Tuesday, May 7th. That's built into the expected move on Options AI and why I like this service so much. Now, this service, Options AI, is only a couple dollars a month. I do have a discount code. So if you guys are checking it out and you're thinking you want to try it out for a month, it is month to month. If you use the code DRAWBRIDGE in all capitals, you get a discount. So that's like a nice little thing. I promote it for them. They give me a little kickback. If you guys sign up, you get a discount. Everybody wins. It's pretty great. So I would look to do that, or just sell the short put, the 20 short put, or the 19, either of those, even on the shorter duration, but collecting 2.5% or 42 cents. If you're bullish, if you're thinking about going long that stock. Obviously, if you think it's not going to go up, you could sell it as a strangle as well, make $80 on this. If it was just to stay in range between $20 and $26, and its valuation is already quite high, so it may have already seen its move. It might be a good time to sell calls against it. I don't know how explosive this stock could be, but of course, being like broadline retail, unless it's really specialized, if it's just a retail store, it's unlikely that it's going to have an explosive upside. It'll probably just go steady up after, considering it's already had a pretty big move. So something massive would have to be happening. If you're worried about that kind of thing, just put it on as a spread, the call side. Let's just zip this down and let's just look at what if, you limited the profit. This is collecting a credit. If we look at the profit on here, this is a lizard setup. It's not a jade lizard. Jade lizards have no upside risk. This still could lose money if it went up, but it's got a profitable range between 26, and then if it exploded to the upside, the max you could lose $140. This is what I would do with like tech stocks. If I was worried that a tech stock or a Bitcoin stock could rally way up, then I put on these types of trades where if it just explodes up, I'm okay. It's actually, especially if it explodes up quickly, it's barely a loss. You can see this dotted line. So if it moves up rapidly on the first couple of days, I just close it for a smaller loss. I don't even let it take the max loss on those trades. And Eric's asking about end phase. Let's take a look at end phase, which should be in a pretty good range for playing long. Valuation is still a D here. $109, 1 year down 31%. I'm looking at the valuation. D. Growth is a B. Profitability is a B+. Profitability is probably my key metric in this environment. The interest rates are pretty high, so I am definitely considering them. I want to make sure companies that I'm going long are profitable. Momentum's a C. Revisions are D. Quant rating number 21 of 29 in the semiconductor sector. So not all that great, but Enphase has been a pretty good winner for us. So there's lots of premium in it in general, and I like to play it. I usually just play it long. If I am going to play this, I don't mind owning 100 shares. You can see we did have some trouble at the end of last year down that $75 range. I am looking usually around that 100 mark. When it's trading at 109, downtrending, there's opportunity here for sure to make money using like a put ratio spread. So let's pull up a put ratio. Actually, let's look at the expected move in options AI. I'm gonna close this off. We're gonna type in Enphase. You can see how I use different platforms for different things. So if I wanted to do a bullish strategy, what I'm looking for is where are we going to see the expected move. Here's a little spread for smaller accounts. These spreads are amazingly decent return. You know, if you can do these successfully, it is amazing how much money you can make just doing spreads. This one has a 79% probability of making $21 at the risk of $79. Now, if I thought that Enphase was going to go up, what I could do is do like a call spread, and I could just, I could be pretty aggressive with it. Say I wanted it to go from here. Well, I could risk $485 to potentially make $515 to double my money if I thought that it was going to go up above 114 again, if I thought this was the bottom of the rally. It really depends on where you are and where you think that may play out. Obviously, the expected move is quite a bit lower than that. So it's about a 50% probability to 55% probability to be exact when we see the red zone below. If we thought it was going to go down, we can do a bearish position on this. And I love the flexibility of, oh, that's a put. Let's do a put spread. You know, I much prefer doing spreads than anything, but if I thought it was going to go down, then I would look at something like this, risking $538 to potentially make 462, max profit if the stock trades below 107. Again, I don't typically take these type of trades. This is not really how I trade. I like to look at companies that I like, wouldn't mind holding in the long term, and I don't like to take a lot of upside risk. So looking at this, if we were to play the May 17th, 99.83 being the downside, let's see if we can build let's see if we can build a position that makes sense with that $100 break even. Go over to Enphase, which should be on the list here. We're 109.95, down 3.5%, 33 IVR. Definitely a decent day to be entering a ratio spread on Enphase. So May 17th, I can play pretty aggressively on this. What I'm doing is I'm looking for, I'm going to try to get $100 out of this trade. And the reason for that, so this collects $100. That means if it goes up, I make a 1% return on risk capital. If the market goes up, where's my, why this does this? Okay, we'll drag it over there. There we go. The 30% move, if it goes under $100, I'm basically buying at $97. This is my break even, 97.83. You can see right there. So if it goes under 97.83, I'm buying it, and I am long the stock. If it goes up, I make whatever the credit collected is, this $100 and about $30 to open. So if I could get, $120 to open this trade, that is more than 1%. And this is May 17th. There must be earnings in here. I thought Enphase has already reported earnings, but must be wrong. Thursday, July 25th. Yeah, they've already reported. So earnings are passed. There's an extreme amount of premium in there. I love this little trade. What a great little setup. With the potential of making up to $500. Makes $100 if the stock goes up. Nice range if the stock drifts a little bit lower in between that kind of 107, 100 to potentially make over 1% return. Very, very simple setup, selling 2 of the 103 puts and buying a 107 long put. So I'm just going to close that. So there's the setup, selling 2 of the 103s, buying 1 of the 107s, and for a credit of, I would assume we can get a credit like around 125 bucks. So nice little one. I'm going to screen grab that. If I take this trade, I will post it in my Discord. Probably an opportunity to talk about the Discord. If you guys are interested in it, you can head over to Patreon. You can join as a free member. That means you get your alerts to come into the Tuesday streams. You get any other special alerts that I put out. Then if you become a paid member, you get obviously my paid alerts, which are any of the trades that I take. I trade futures. I trade options on stocks. I trade synthetic stock positions. I trade black swan hedges. I mean, I love the black swan hedge trade. You guys have seen that video, I'm sure. If you haven't, you should check it out. A very popular video of mine that I released a couple months ago. I built a really sweet little tracker for that. It's available on my web store. So if you're not familiar, you can head over to my web store, drawbridgefinance.ca. You can check those out. Any of my spreadsheets are for sale. I'm a spreadsheet builder. That's kind of how I facilitate my navigation of what I do in the tech space. It's I've always built spreadsheets, and it's super fun, and I like to make them just like clean and simple and work well with lots of color coding and customizable. Pretty fun. And some of the sheets, like my rolling options record keeper, is pretty extreme, and they allow me to develop some of these more complex trading styles and visualize them and see how the adjustments track. So it's been pretty good. What is my favorite semiconductor? I think right now, my go-to, does it even qualify as a semiconductor? Is it AMD, kind of in the chip space? If I was looking, let's look at the semiconductors. So the number one, this is the ratings here. So if we're looking at ACMR, haven't even played it. The quant rating is a 4.89. ASML is great. The valuation right now is a little high, F valuation, but obviously they have the technology to print those very fine semiconductors that nobody else really can compete with them. And then what else is in this list? These are, AMD isn't even in this. We've got Enphase. I don't play this sector very often. You can play SMH. This is a better way, I think, to play the sector. If then you don't have to pick them. We're at 216. You can play this directly with options. So if you wanted exposure to semiconductors, which I don't think is so bad right now, but looking at the chart, a $216 valuation, May 17th. The 200s only make about 0.5%. That's about in line, 0.5%. Now this is an ETF, remember, so this is paying 0.5% in 2 weeks, so about 12% annualized, and that's for the 200 put. If we look at the expected move on that, it should be well outside of the expected move. So May 17th, 205. It's actually inside of it. Interesting. I don't know why there's not a more premium in there. I would have expected there to be a little bit more than 0.5% for the 205. Again, these are the types of things, though, you can play these as ratios, and that may or may not work out. If we can, it allows us to be a little more aggressive sometimes with the strikes. If you're not comfortable playing really tight strikes. That's collecting about $100. Comparatively to that 200 short put, this is a much stronger trade because you're getting the same $100 comparatively to selling the short put, but you have a profit profile that allows you to make more than $100. So if I was comparing selling the short 200 put or doing the ratio spread at the 205 long and two of the 2025 short puts, then you get this little profit spike to the downside. which has some potential. And obviously playing these as a Batman is something you can consider as well. I might go a little bit wider on the call side on something like this, especially with the consolidation that was happening. But if you could buy, here's a cool trade. Just buy a $5 spread. This is open for next to nothing, but still a small credit. When you can do this, you have a valley inside here. If the ETF rallies, you could make up to $500. You can see the directional slope on here, the dotted line. If you're looking at the dotted line, it is a very delta positive trade. What I was trying to build was a let's do one of these. Let's do a 3, but buying 2 and see what that looks like. That'll give you a small credit, only about $30, but it's a very interesting profit profile. You have about 1.5, about 3/4 risk to the top side. So it's not as steep if it does go up with quite a large profit spike. If the spreads were a little bit tighter, it would be even better. But you can get as creative as you want with this. And this is where, like, using my RORC, my rolling options record keeper, which is available for patrons for free. So if you're an options tier patron, you already get a free copy of both my blank one plus the record keeper that I keep all my trades in. But it allows us to visualize these trades and to see how adjusting a trade might work out. So it definitely changed my trading style. If we were to look at this profit profile and see that, 245 and 230 there's a big tent. If I was planning on holding the expiration, well, I can visualize that here and I can say, well, what do I think it may trade up here in that 240, 235 range? If I think it's going to go above that, obviously I wouldn't do that trade. I would build something slightly differently, back to that buying a spread for the call spread. If I thought we were going to see a rebound in the semiconductor space, it's still open for credit, which is nice. And so you start with $20, and if it goes up above 235, you make $500. So very bullish, and you think it's going to trade above this line, 235. If this rally is going to continue up, if it crosses over, that's a $500 profit. If it stays in this range, it makes nothing, basically $20. And then if it drops down around that 205, has a chance of making $200. So you have like a $500 profit range up above, and then you have the profit range to the downside between 200 and 205. So right here, you've got two ranges essentially. This is just a line. And this, so in the middle, you make $30. You make a little tiny bit of money in the middle, more money below, more money above. That's why I like to do setups like that. So that's selling the ratio spread, 2 of the 205 puts, buying 1 of the 205 puts, May 17th, and then buying a call debit spread, the 230, 235, for a net credit of around $30. Not a bad little trade. Etsy earnings on May 1st. Oh yes, Etsy. Etsy, I love and hate you at the same time. I've luckily done very well. I say luckily because the stock is all over the place all the time. I've shares that I bought for $90 that I've been limping along trying to make money off of. May 1st is tomorrow. We've got the expected move between 61 and 75. If we were to set something up neutral for this week, we would just be looking at either an iron condor. This is risking $57 to make $43, 75% probability of making money. I would widen this out slightly. Etsy tends to be a bit of a mover. You don't have to go crazy here. The moves have been big this week. So this is making potentially $31 at a max risk of $69. So that's one way to do it. That's the short 78 calls, long 79 calls, short the 60 put, long the 59 puts. So they're $1 wide spreads, looking for $31 credit collected. George says, hi, did you know you can add upcoming earnings on your quote board? It's under upcoming events. In which platform, George? Is that in Options AI, or is it in IBKR? In IBKR, I have it here in my watch list in my regular platform. It doesn't show them in this demo mode. I'm showing them in this paper trading mode, so I can't add that column here. It just shows blank because it is a paid feature in IBKR. But earnings, obviously, if we looked at, let's just see where we are here on the SPX trade, still in range, trading at 50.68. If we were to look at TradingView, this is also a paid platform, but you don't have to pay for earnings events. So if you were looking at like Etsy, for example, and they're not always right, but it is showing you there's earnings coming up. So the pink, this was an earnings miss because it was red. Green is it beat. So we beat earnings 3 times and we missed on the last one, which wasn't great for the stock. And this beat was nice. This miss has caused it to come down a little bit. We'll see what happens. From my own experience, because I have an Etsy store, I would say that we're probably in a miss scenario, just looking at my own revenue stream in relation to what it has been in the past. I would say that my volume of sales is lower than normal. It's one of the reasons why I play the stock, is because I'm a user of it. It's one of my personal rules of investing, actually. Invest in what you use. And I have been a long time user of Etsy. My gut feeling is we're going to be a slight miss on Etsy earnings. So that is something to consider. Point of control is this volume profile here. Point of control is slightly above even if we look back in a very long time frame. Let's just look at the kind of the volume profile here on the side. Most of the volume has been around this level, so we're near the point of control. Really, we have to have a pretty big earnings beat in order for the stock to go up. My expectation is that it will be years, if not ever, before we see this $160 mark. I don't think we're going to trade in this zone any longer on Etsy. If I was guessing, I would say that 100 is going to be strong resistance here, that 100 level. So I would love to see the stock rally back up to the 100 level, but these days of $300 stock this was a flash in the pan from the pandemic. We have to look at the longer term trend. If we look at a weekly on this, I've been playing Etsy for a very long time too. So if you drew a line kind of there, if that was a regular trajectory, then, and it kind of takes out all of this craziness that was March of 2020 to June of 2022, and then the subsequent rally. I think that's more of a realistic return on a company that is consistently making money. I'm pretty sure they're still profitable. Otherwise, I wouldn't be long them. But and they do charge us pretty heavily, I have to say, too, as a seller on Etsy. Profitability is an A. It's just their valuation is still high. Even at these low valuations, it's still high, down to 30% year to date. Not year to date, down 30% on the 1 year chart, 15% year to date. So again, I would love to see some upside movement. Quant rating as a hold right now. In IBKR, yes. Yes, thank you, George. Definitely in IBKR can add the, can add the earnings. We can just do upcoming, where is it? It's under manage columns. It's, I'm pretty sure, I'm going to add it here, but I'm pretty sure that will let me apply that. I'm working on a very small screen here. It is showing it. Wow. There you go. Look, I'm going to keep that on. Thanks, George. I hadn't tried that in a while. I'm surprised that it shows, but yeah, it's great. So when we're doing earnings trades, one of the things I like to do is just sort by earnings. So we can see what's happening today. We've got AMD, Amazon, Pinterest, Riot, Starbucks. I have positions on AMD, Amazon, Riot, and Starbucks already. So those, if you're interested in seeing what I have on, I kind of constantly keep positions on in all of those positions. And SMCI, I don't have a position on. The stock has just been so high flying that I'm leery to trade this type of stock when it's had this kind of move. If you're looking at like a stock that was trading at 300, and again, this is where, drawing that same sort of trend line that I did on Etsy, let's just say that was the line on these daily candles. Well, that means that the stock could potentially come back down to the 500 level to get into the line. So the question is this similar to the tech run up that we saw in 2020 when we saw all of the tech stocks running up, everything that was like home computing, sales, Amazon, things like that, Etsy, Shopify, they ran up. This is an AI stock, SMCI. So we're seeing a lot of run up. Is that going to follow suit comparatively to that Etsy stock and say, well, is it just going to come down the way that Etsy did when we look back and we see that history repeating itself? I don't like to say that, but sometimes that happens. And when we see that out of line action, there's a good chance that it could come back down. So we'll see what happens with SMCI. It could be in the middle of that right now, and this could be the start of a continued slide. It's probably inexpensive to buy butterflies on SMCI, even with earnings. So you could go into like SMCI and you could pull up how do you make money off that move? I'm looking around here. Let's just say we thought that by the end of the year, November, 190 days out, what if we thought it was going to be around $500? We have to give ourselves like a really big range on this. What if it was between 500 and 600? Can we build a butterfly there? So this has a around $800 cost, $975, about $1,000, but it could make $9,000. So there's a potential of making like 10 times your money if it lands between 400 and 600. That's a big ask. That's a 20% drop from its current value, but these are the type of stocks that could do that. So if you were looking for ways to play short, butterflies are not such a bad way to do that. They would make money instantly. If the stock dropped today to $500, it would already be a profitable trade. And then depending on where it is, when it happens, like say the sell-off didn't happen until middle of June, then highly profitable. You want it to be closer to expiration. You need to time these things. But if it happens in September, doubled your money if it drops into that, with the potential of going almost 10 times your money if it would drop down to that 500 level, which it easily could. So that is one way to look at it. Okay, we're at 11:54. We've got a few minutes left. Thank you for the likes. I've got 9 likes so far. That does help the channel. Thank you for the chat. If you guys are making money and you want to leave me a super chat, you're more than welcome to do that. I do have that turned on. You can always donate a couple bucks if you've made money off of a trade idea that you've had here. I don't usually ask for that kind of thing. It feels kind of weird, but that option is there. One of the things I was thinking about doing was if I run these live streams and I get super chats, then I might run them ad free. I'm sure you guys are seeing the ads. If somebody wanted to throw me $5 and put that on, I will run the next stream with no ads. We'll see how that goes. But I always appreciate, you guys watching, tuning in. Make sure that you subscribe, hit that like button, leave a comment, and there is time. So if you've got 1 or 2 more questions, please jump in the chat in YouTube. Let me know what you're looking at, and I will pull up another trade idea on these different things. Otherwise, I'm going to play with SMCI here for a minute while I wait for you guys to jump on that. Let's see if I do, what if I widen this out? Add some risk to the downside. Can I make it cheaper? what I'm trying to do is get it in for a next to nothing. So in this case, I've added risk to the downside, decreased my upside risk. Definitely makes it a more delta to positive trade. So if the sell-off did happen in June, this is still a negative trade. It's a negative P&L when you have a ratio like this. Other thing we could do is we could actually risk a little bit more on the top side. So let me move this back. Let me move this back to the 600. There's the even trade. And then what if we went out and we just sold even if we sold like is there really that much value in these? That's crazy. This is looking for double the stock price. I feel like you have to go to 100% move to see this drop. It is getting a credit. You would get a credit bigger than this. I would assume that we could get into this trade for about $600. It does have a risk of $4,000 on the top side. But if you're bearish on SMCI and you don't think it's going to trade above 1,700 over the next 200 days, which would literally be double the stock price, that's a pretty extreme move. That would allow to finance some of this butterfly to the downside. But that's kind of how I would be leaning on these tech stocks. Okay, it is time. I'm going to call it. I'm going to push this button that says let's get rich together. That's what we're trying to do. If you have any questions about anything, please send me an email. You can send me a message or a comment on YouTube, any of those things. Remind my patrons, we're going to be doing this same time on Thursday. Let's look at that little trade actually before we get out of here. Let's just look at the trade that I have on today. So we're going to go to positions. Oops, I don't have the screen on. Let's just look at this. Oh, it's currently down $12. We're down. We're getting close to that bottom side of the range. This is definitely a trending day. We're still in the max profit range. We're still in the max profit range, but there is a chance that we can move into this loss zone. Right now, at the very bottom of it would be about $176 loss. We are marking at that 60.61. If we look at, let's just zip over here and take a look at the quad. Where what I want to look at is where we are in the VWAP comparatively to the VWAP. When we trade outside of this is a 1 minute chart. When we trade down outside of the second standard deviation, there's a chance that we break up to the upside. So we're not down there yet. 50.55 is where I start to lose money on this trade. So we're definitely getting close, $5 away. These are the Heiken Ashi candles. So they don't move. They're not red and green in the same way. They tend to follow the trend. So you see like a cluster of red candles and then a cluster of green. Point of control, obviously higher than the current price because we're at the day's low. So these are new low of day pricing action right now. If we scrub out a little bit, we'll see where the most of the volume was over the last couple of days. We do have a node right here around that 50-50 level, which is fairly high volume. So there'll definitely be support around that 50-50 level. Let's just let that load again. So what I'm looking at here is that large buying candle here around the 50-50. And then obviously tons of action above. We do have Powell speaking tomorrow, right? Pretty sure Powell's speaking tomorrow. We've got the Fed minutes coming out. So we'll see some price action. There'll be more volatility tomorrow's action for sure. Okay, you guys are fantastic. Thanks so much for watching. We'll see you soon. Let's get rich together. Take care. Bye.